Hey traders, I'm going to talk you through today a trade that I took on the Dow on the 4-hour chart. Now, if you're subscribing to this channel, if you've watched a few videos and you've noticed the way I trade, most of the trades that I take are day trades based on the 1-minute chart or the lower time frames. But the system that I use, my gold system that I came up with and invented and implemented and that I teach people, it works on any time frame. And today I took a trade pre-market on the Dow. It was outside of normal trading hours, but it was on the futures market, the Dow futures, and it lasted, although it was based on a 4-hour chart, it lasted, I think, about 20 minutes. And I say I think because I wasn't watching. The trades that I place on the longer term charts are basically automated trades. I set the entry automated. I set the exit automated, so I'll either make a profit or I'll make a loss, and I set a stop loss and a profit, and they're automated so that I don't have to sit and watch the charts, because we don't all have all day to look at the charts. And also, outside of trading hours on the Dow, it's not, I don't trade the short term time frames on the US markets outside of the normal trading hours, just like I don't trade the European markets on the short term time frames outside of trading hours, normal trading hours. And that's primarily because the volatility isn't good enough and the spread is higher. And so, it's basically more effort for less reward. But anyway, the European markets and the US markets and the Forex markets are all fantastic in terms of volatility. And I'm talking about the indices and Forex really. On the futures markets, any futures markets would do. But have a look at the longer term time frames out of hours, because the system that I use with the river of value still works. It works really, really well. And I took a trade today and I was, in my mind, I suppose I was 100% certain that the trade would be successful, and it was. I was pretty certain of it when I set the orders. And you can't, with every system, you can't be 100% certain. With any system, you can't be 100% certain, because certain things can happen that just are out of the blue. They're normally provoked by news events, but there weren't any news forecast today. So that's, something to bear in mind when you're trading the longer term charts is, are there any news events in the offing that could, a surprise news event could turn a market and make it move unexpectedly. But there weren't any planned today, and that's what I was bearing in mind. But anyway, I took this trade and I'm going to talk you through it now, and I'm going to tell you why I took it, what I did, and if you're looking to trade and trade successfulity, then the longer term charts can be easier than the shorter term charts. It's the same methodology, but it can be easier because basically you don't have to sit watching the charts. The 4-hour chart, it only produces a candle every 4 hours. So every 4 hours there's an opportunity for placing orders. And coming up to the open on the Dow. You know, I placed this trade about half an hour, I think, before the open, and so it was likely to be volatile on the open. And this trade didn't last long. It didn't last a full 4 hour candlestick, and they often don't on the open. And, you know, there aren't trades every day on every market on these time frames. They take a while to develop, which is why it's a good idea if you're trading the longer term time frames to have, you know, several charts in your view or accessible to you with your broker, and have favorites. You know, 10, 15 charts will give you one of these type of trades, I reckon. You know, I mean, I probably take one a day, something like that. And sometimes, you know, it's good enough for the day when I don't have time to day trade. Then, you know, that's still providing me with my trades, which over time provide me with an income and a profit. And so let's go through this chart and just analyze it, and I'll tell you what the trade is, where my loss is, stop loss, where my take profit is, and we'll have a look at the outcome as well. Okay, let's have a look. You can see big gaps between these numbers here. This is the index, and big numbers in between. Each candlestick huge in terms of the number of points between. And, you know, so the spread is minuscule in terms of the size of the candlesticks. The volatility is shown within the candlesticks, massive candlesticks. And I've taken a trade short. Okay, I've entered the trade short, and I've placed my stop loss here, and I've placed my profit expectation, my horizontal profit level, take profit level here. Okay, and it's almost exactly double the stop level at which my profit is. Now, this is so perfect in terms of everything, this trade, that I was convinced it was going to be a winner. And I'll show you why now. Okay, so why did I enter? Okay, so the reason that I entered was massive red candlestick coming down from highs here. Okay, big red candlestick took the market below the river of value, and then it went up and started rejecting back down. And so you've got 1, 2, 3 big red candlesticks consecutively, taking it down to the lows down here. Okay, so this is acting as support here and here and here, acting as support and likely to be broken. You know, it's likely that price will come down here. However, I'm going to take profits here, and the reason that I'm going to take profits here is because each time the market came down and rejected back up, it reached that level. Okay, so I think it's going to reach that level again. The odds are, and the probability therefore is, that it'll come down, and it will, you know, something will probably happen here in terms of rejecting back up a little bit, but I think eventually it'll go down, but I'm not going to take that chance. I'm going to take profits at this level here, so I'm not expecting it or needing it to make a new low to take my profits. Okay, so I've put the stop loss above the high of the candlestick. I've left a little gap, few points as a gap, and you know, that's just because the broker sometimes likes exiting my stop loss early. And also because we're coming up to the open of the market, and it could shoot up. And if it shoots up and it happens very, very quickly, it could just whip my stop out before coming back down again. So I gave it a couple of points, basically room to breathe, and that's a good idea, especially when you're not too precious over the number of points that you're playing with, because we're talking about a 4-hour chart on the Dow here. So 73 points as a stop loss, and therefore double that for my profit, 2-1. Now, 2-1 reward to risk. How many of these sort of trades do you need to take to start doubling your money, doubling your account? Not many. If you take a 1% account risk, or a 0.5% account risk, or even a 0.1% account risk, which is what I'd recommend people do when they start out, it's not going to take long before you start making really good money when you've got 2-1 reward to risk, and that's what I'm looking at on this particular trade. Okay, so the market went up here, you see, up, rejected from the river of value, and it's done the same again. It was a slightly higher high, and because it was a slightly higher high, I didn't enter the market just below the 8 EMA. I waited for the market to go down below it and start going down. And what I mean by going down is it changed from a green candlestick, which is what it was here, to a red candlestick, and there's a tiny bit of red in there, so the market went just below its open, and normally that's a good entry anyway for me. That's what I do when I'm scalping, is I wait for red to green, or green in this case to red, the first bit of red in, and that's where my entry was here. First bit of red on this candlestick and I'm in. And yeah, 2-1. So everything's sort of lined up really, really well on this trade. Sometimes I'd take 1-1, but because of where the support level is here, I think, and also because it's been down to this level several times quite recently, I think we could see a candlestick taking it down here, and it might happen. In my thinking, it might happen on the open, so we might just get a massive plunge down on the open, and then perhaps bounce around a little bit and maybe go down even further. And if it does that, then there'll be other opportunities to go short, because I'd have already had the system exit me for a profit. So the first time the market goes down here and the candlestick touches that line, the computer will exit me. So really useful, this, if you've got meetings, if you're going to visit people. This is fantastic. It's an automated stop loss. It means basically you've got no choice, you're out. For a loss if the market goes up here, and you're out for a profit if the market goes down here. And if you're not at your computer, then this is a safer way to trade. I normally recommend that people don't leave their computer during day trades. You should be watching the market, and I don't always place physical stops. But on the longer term charts, and although it's a longer term chart, it's still a day trade because it's happening during the day. And I expect it to be quick. I don't expect it to be messing about in here and then going down. I expect it to be quick. But I'm still not going to be watching what's going on. And I'm going to set times for the computer to take screenshots so we can see the outcome. But anyway, this has gone red. It's bounced down from the river of value, and I expect a further regression in price. So let's have a look and see what actually happened. Okay, so you can see here that the market, this was the chart that we had on previously, went up, and that's where I entered. That's where I took a profit there. So I got 2-1 exactly. Could have had 3-1 or even 4-1. But then if you set preset orders to take down here, the chances of it getting down there without bouncing back up again are reduced. And so the probability is lower, even though the reward to risk ratio is higher. And that's the way trading works. And so I set this at a 2 for reward, 1 to risk, and I got my money. And so, if you're taking trades like that, you really, one of those a day is good to go. Even I took the trade, and my position size was £5 per point. And so this doesn't require as much margin as day trading, where you might be talking sort of 10 times that, but the risk is the same in terms of the number of pounds that we've got at risk. So 300, 400 pounds at risk to gain 700 pounds. Okay, so it requires less margin, which means that I can do some day trading as well, because all my buying power is not used up in this one trade. So that's useful, and was useful for trading on the Nasdaq at the same time as this. Anyway, so looking at the 1 minute chart, through here, this is where I entered the trade up here, and that's where the market opened. So it opened down. That was, a good opportunity for any of my traders to trade the 1 minute chart on the open, wait for that spike to come in, turns red, short, down. And then it does the same again here, except it bounces down with a bit of gap between the body and the river of value. Then it comes right down to the bottom, biggest body in this red candlestick here of the entire run down on this chart. And when that happens, very often that's a sign of exhaustion. It means there are no sellers left and they're all exiting for profit, and that takes the market back up. And then it decided to do a second leg up and then start coming down again. And you'll notice that actually this looks very similar to this. Higher second high, and then the market started coming down again. And the market came down, slight pullback. That was a trade entry again for anybody who has taken my gold system. 1 minute trade entry, and then down, and then you're looking at your profit, taking your profit. And so let me see whether I can show you that, what happened next. There you go. So the market carried on down, and without me, and I didn't care. I came to my computer screen and I had no trade, and I had some money in my account. So that's how to trade in terms of the longer term charts, how to mix it with your lifestyle. Because if you've got a job, you can't be at your screen all the time, all day, during the day. But how about having 5 or 10 minutes at lunchtime just to check a few markets and see whether there are any trading opportunities? You only have to do it every 4 hours using the 4-hour chart. I think you could probably manage that, couldn't you? Anyway, if you're interested in learning about this sort of stuff, give me a shout. My name's Anthony Beardsall. I do hope that you've enjoyed this video. Let me know if you've got any comments, or do subscribe, because I'll be doing more videos like this. And I hope that you're having, and I trust that you're having, a fantastic trading week. See you on the next video.